The market is confused. We got half the traders out there insisting that we're still in a bear market, while the other half of the traders insist that we've been in a bull market since October. The real answer is that we've been sideways since the beginning of 2023. However, there's one thing that I've seen different in the past couple of weeks that bears noticing. Welcome to the 12-minute trading market minute for Sunday, the 16th of April. First of all, we're going to start on the daily chart of the S&P 500 futures since the beginning of 2022. And so this is where the bull market transitioned into the bear, and it really didn't take hold as a true bear until it started printing these lower highs. So we'd have these strong rallies, which would pull back. Everybody was comfortable with the pullback and said, okay, I'm just going to buy the dip. And then that dip turned into a lower high, and it trapped the bulls. And this is where we get these big sell-offs. When you get these bull traps setting up, usually these come along at the same time that the Fed disappoints, which is why that they're so devastating. Here's another one. Nice rally up to a higher high, pulls back, and then it just keeps on going. Another one here in August. Lower high, devastating move. Lower high, devastating sell-off to the downside into the lows in October. But since then, we've not seen that same type of activity. Yeah, we did have a higher high bull trap that got taken to the downside here, but the selling was very modest and it turned into a consolidation. So that is a huge asterisk there to say that something changed as we got into the end of 22, into the beginning of 23. And really, since the beginning of the year, all we've seen has just been these rallies up and choppy sell-offs to the downside. And both the rallies and the sell-offs are very choppy. Nothing is very linear. We have lost the same power that we had on the bear market rallies, as well as how strong the sell-offs were. So we're just chopping around in this big range right now. So, of course, it makes sense that everybody's arguing for either one side or the other, and I don't really care to get into those religious arguments. I just look at the price action. There are specific clues that attach themselves to bear markets, and there are specific clues that attach themselves to bull markets. Let's go back to Friday's price action. So just a couple of days ago, Friday last week, we started off by rallying straight out of the gate, really strong to the upside. And this created yet another one of these bull traps, because what happened is once the retail traders started to jump on board and went long, because Thursday was pretty strong as well too, they took them underwater, suffocated them all the way down to the lower expected move. But what you'll notice is that the price closed right back into the opening range again. So this first half, yeah, this is what we see during bear markets. We see any rallies early in the day are absolutely destroyed and punished. But what we typically do not see during a bear market is a recovery rally into the end of the day. And here was last Monday. I mean, this is another good example. This is what I call the Groundhog Day type of price action, where we start out negative, we actually gap down, set up our opening range, and then we spent the entire day rallying higher. That's not the sort of price action that we see during bear markets. This is actually the type of price action that we see during bull markets, or at least ones under accumulation. So zooming out to the weekly chart, we're in an interesting spot here because this could go either way. Right now, this price is a lower high, and if it acts as a bull trap, we could see much lower prices in the near term. But that's not what the price is doing. More than likely, we're going to see this break above 4,200, in which case this will act as a continuation of this weekly uptrend. So no matter how choppy it is, it's still an uptrend at this point. That's it for today's Market Minute. Thanks for listening. We'll see you in the next one.